Hi, I'm Steve Richardson. Are you looking for financial aid for college, graduate school, or professional school? If so, you might be inundated with a lot of different options and programs, and you might be wondering what's the best one for you. Well, what I advise clients to do is to exhaust all of their options under the federal programs before they consider anything else, a state-sponsored loan program or a private loan. Now, you might be wondering why I make that suggestion, why I tell people to go with the federal programs before they look at private loans. Well, there are several reasons. The first is an in-school deferment. The federal government automatically offers to the student a deferment on the student loan while they're in school. With a private loan, take a look at the loan paperwork, may not offer that. Second thing is during that deferment period, interest is going to accrue. Now with a private loan, that interest is going to accrue, and when you graduate and it comes time to pay the loan, that interest is going to roll into principal and make the amount you had to pay back much larger. With the federal system, there's something called a subsidized loan. If you get a subsidized direct loan, then that's just that. The federal government pays the interest during the deferment period, and your balance doesn't get any bigger upon graduation. So you're going to want to look at subsidized direct loans. Now, talking about interest, there's interest rates. Interest rates are much lower in the federal program. With private loans, interest rates can run from 8 to 10% or higher depending upon your credit history, your credit rating, because it's credit-based. Whereas federal loans for the student are often needs-based and don't require a cosigner. The interest rate does not fluctuate depending upon the credit score of the student. Now, the subsidized loans are needs-based, but the unsubsidized loans are not needs-based. But even so, no cosigner, interest is not determined by your credit score. Now, let's talk about deferments and forbearances in general. We talked about the in-school deferment. Well, the federal government has all sorts of deferment and forbearance programs if you get into trouble to step back. Your obligation to pay the note is temporarily suspended while you try to work things out, whether it's an unemployment, a temporary disability, that sort of thing. Whereas private student loans don't necessarily offer that. You got to look at the paperwork, look at the loan note very carefully to see if it does offer that. Also, what if you get into default? What if you default on the loan? Private student loan, you're in default. That's it, you defaulted. You can't get out. Federal student loan has programs to help you get out of default. Finally, what if you just can't pay it? What if you need it discharged? There are discharge programs in the federal government that private student loans usually don't have. Right? If you become permanently disabled, you can have it discharged. If you can get into what's called the Public Service Loan Forgiveness Program. So your type of full-time employment can help you to discharge a loan if needs be. So those programs are available. So overall, federal loans, as you can see, can be a better option than private loans. So if you're looking for more information on financial aid, please feel free to go to my website at richardsonlawoffices.com and download my free book, Applying for Federal Financial Aid, the definitive guide for students and parents.